Well, let's jump into that. So overall, we're sort of seeing the market become a little bit more competitive for talent. I think macro, it still slightly favours the employer, the hiring side, but a lot less so than it did over the past couple of years. If we dig in by industry next, should we start with private equity?
Absolutely. Yeah. So private equity has been our largest growth segment when we look at the data. Hiring demand there has really shot up. It's the highest actually I think we've seen since we've started measuring this. There's still quite a bit of supply. So on the flip side, you're not seeing, to your point, is it an employer or a kind of professional candidate-led market? The magic number for that's 50. And private equity had been up at 100, so very much an employer-led market. That's now starting to drop, and we're seeing it coming into the kind of low 70s, which is a significant drop from historically. But to your point, it's still a great time if you're hiring and you're an employer. I guess looking at what's driving that private equity demand. So my initial thought was, I guess it's just more deals going through. It feels slightly more positive sentiment despite tariffs and the rest of it, and all the uncertainty we're still living with. But looking at the numbers, it accounts for a little bit, but not much. So EY's pulse survey, their Q2 pulse survey, showed that in terms of deals over $100 million in H1, there'd been 270. If we compare that to the previous year, there was only 200. So there's growth there, but we're a long way short of the kind of 22, 23 levels of deal activity we were seeing. So I don't think that really accounts for much of the kind of hiring demand we've seen. I actually think it's because there haven't been as many exits, and as a result, as it's been well documented, PE funds are sitting on larger portfolios, so they have more portfolio companies. On top of that, they're having to make more of an operational improvement to these businesses, and that's partly, yes, that they can't use financial leverage as much, but also partly if you're holding onto a company for longer, probably the original VCP that you'd set out over the 5-8 year time horizon is no longer valid. So you're having to almost do a secondary VCP and bring in a kind of second burst of talent who are going to drive that. And certainly from what we've seen in the kind of PE funds that we work with, there has been a lot of the latter. We've seen kind of chief transformation officers come in for a second stint, and you're almost splitting that ownership period into two distinct VCPs as they look at what value they can add in the latter half of that deal cycle.
Yeah, it's I guess worth saying that when we talk about private equity, we're encompassing hiring within portfolio companies of private equity in the fund itself. And certainly, I think within that longer hold period, something that's happened over the last couple of years is this AI theme has emerged, and a lot of our clients sort of working out how to integrate AI properly into the business operations of their portfolio companies. And that's become a real necessity over the last couple of years. And as you say, it's maybe refreshed the value creation plan or add another layer to it that wouldn't have existed, sort of 4 or 5 years ago.